So in this video, we talk about major purchases. Your book defines this as a planned buying process. So you have to define, and the example actually goes through buying a car, but similar discussion can be made for many of the major investments or purchases that you're going to be making. So buying a house, buying a car, and perhaps an upgrade to your house, and so on and so forth. So first of all, you need to decide what is it that you really want. Now, the issue becomes, what do you need versus what do you want? And there's always the issue of temptation. So, I'll go through with the example and of what I drive. I drive a Volvo, a mid-size SUV, the XC60, and I bought it in 2011. So I'm still driving it because I like my car, and it may not be the fanciest car, but to me, it is a very nice car. I really do like my car, and I intend to drive it for the rest of my life. So what do I need? Well, I actually need a car that gets me from point A to point B as safe, as reliable, as cheap as possible. So I know, my car is, a little bit better than this. My previous car was a Toyota Corolla, and I was very happy with it. And it really got me from point A to point B. And it was really, really, gas efficient. I used to get 40 miles a gallon. And I really love that car. I mean, the only reason I sold it is I had 150,000 miles on it, and it was actually becoming less and less reliable and more costly. So I sold it, and I bought this Volvo. So when I bought the Volvo, it was actually a little bit more towards what I want. So, I mean, it's not obviously, a Mercedes or a BMW, but it's still, it's an import. It's still a nice car, and but it is somewhere between what I need and what I want. So you have to also decide, what is it that you need and what is it that you want. And obviously, we have our temptations. We are human beings, and we like to drive as nice as possible, as reliable, as good looking, and so on and so forth. So, but from a financial perspective, obviously what we need is the most conservative, and what we want is the least conservative. So we got to do some sort of a pre-shopping research. What do we need to pay? What is the expected price? So back then, when I bought the car, I looked around. There are a few Volvo dealerships around. There's one in New Orleans. There's one in Baton Rouge. There's one in Houston. There was one in in Mississippi, Alabama, and so on and so forth. And I did actually give them a call. I mean, just because they're Houston does not mean that they don't have a phone. So I gave them a call. I gave them what I want, and I asked them what the price is. So I, created myself some sort of a range of, what features and what options I would get, and what sort of pricing am I getting, and so on and so forth. The manufacturer suggests a retail price that's online available. You go to any car manufacturer, and it actually gives you what the MSRP is. In fact, most manufacturers will give you build my car feature, and all of a sudden, you get a price that's outrageous, but then you go to a dealership and they give you a price that's better. Although you have to, be careful, they take you to a test drive, and the car that you're driving, that's the one that they want to sell it to you, that may not have all the options and all the features that you require. So what is the actual price? I mean, you keep asking the dealership, what am I going to pay? But, keep in mind that we're still talking about the pre-shopping research. So, go into websites, go on to blogs, and there are secondhand car, sale websites. And, look for an actual price, what would be considered to be the price that you expect to pay. And that is different than the manufacturer's suggested retail price. If you have a trade-in value, well, negotiate it, and that trade-in value, you should know what the value of that trade-in is before you go to the dealership. So, perhaps look for online sales of a similar trade-in that you have, but consider the fact that when you trade in your car, it has tax advantages. The value of your trade-in deducts from your new purchase, and therefore your sales tax on the car that you buy goes down as much as or your trade-in lowers the value which your sales tax is based on. So it has a tax advantage, but it's not all that much. And for a $3,000 or $4,000 car trade-in, for instance, you're talking about a sales tax advantage of if about $300 or so. So you have to be careful about what trade-in value that they're all going to offer you, and the best way to do this is to make sure you know what your trade-in's value is. So for me, the Toyota Corolla with 150,000 miles, I had nothing fancy on it. It was a plain old vanilla Toyota Corolla. Just because I loved it doesn't mean that it was actually made out of gold. So the value, it's a very common car. So I knew the value before I actually went to trade it in. So budget your purchase. What can you afford? What do you expect to pay? What will be your monthly payment given the interest rates, given your credit score? Know your credit score before you get there, and know, possibly look up online, call a few friends, and just to see if anybody recently bought a car, what interest rates that they got, and try to gather as much information as to what you can afford, what is your maximum monthly payment that you feel comfortable with, and then consider your other costs. When you buy a car, your insurance will change, your maintenance costs will change, and a lot of things change. So, for instance, before you make your final decision on the car, get the VIN number, call your insurance company right there, in the dealership. Go have a seat, get a cup of coffee, and then call your insurance company and say, I'm considering to buy a car. I am at the dealership. I'd like to give you my VIN number for the new car that I'm planning to buy. Can you give me a new quote? And it will be less than 10 minutes of a call, and they will give you a new quote. And it may affect your decision. It may be, like, for instance, it was very interesting for me when I sold my Toyota Corolla and I bought my Volvo. Because of the safety record on the Volvo, my insurance actually went down, and I couldn't believe it. It was a substantially more expensive car, but the insurance premium actually went down. So because it went down, I had a little bit more margin that I could pay, and I ended up getting some extra features and extra options in the new car, and that made me happier. So know your other costs. It may be that your insurance goes up, and that may actually affect your decision on the specific car that you're buying. Consider the maintenance costs. But you need to be ready before you get to the dealership. You should do a comparison shopping. You should, avoid doing impulse purchase. You should, in my opinion, you should never go and buy a car the day of the decision. You should sleep on it. In fact, I'm a very firm believer on sleeping on it. Meaning, you go into a dealership and they tell you, okay, most of the time you will hear this. So you are ready to make a purchase today. So if I show you a car that you like, and if we agree on a price, you are ready to make a purchase today. Well, my response usually is, I won't make a decision unless I sleep on it. So let's talk about the price. Let's talk about the car. The car is not going anywhere. And if it is, what are you going to do? But impulse purchases may not end well. This thing about, some people argue and make a story about you buy a car, you have 3 days to return it. No such thing. You buy a car, you drive it out of the lot, that's it, that's yours. And the value of that car, at least 10-15% off immediately you drive it out of the lot. So don't make an impulse purchase. And I personally sleep on it. Your book talks about environmental impacts, safety record. It's important for me too. It may or may not be important for you, but safety should be. So, consider vehicle safety record. As a pre-purchase research, you should consider the car that you intend to buy. What sort of a safety record does it have? And know that not every model has the same safety record. Not every make has the same safety record, and not every year of production has the same safety record. So check to know the safety record. And new safety technology seems technology is developing a lot. And like for instance, now I'm driving about an 8-year-old car, and my car used to be very, very safe, and it still is. But my wife bought a new car, and it actually has this lane protection, and when you park, you can see the car from above, so it makes parking so easy. I mean, I am a bit jealous. So consider perhaps these new safety technologies when you're buying a car, and when you're deciding between a car A and a car B, perhaps they will sway your decision from one to the other. Consider recalls. And so your textbook actually makes an argument as if recalls are really bad. The opinion actually varies on this. A recall may be bad, yes, okay, but a company that refrains from a recall versus a company that recalls on the smallest thing, I would prefer a company that recalls on the smallest thing. So for instance, one of the things that I really like my Volvo is that every time I take it to a service, there's a recall on it. It doesn't mean that the car sucks. It just means that the car, or the company, is willing to take that extra step and make that extra expense and recall the car. It just that is my opinion. So years ago there was a case about Toyota where they try to hide a faulty gas pedal, and several people died, and just because they didn't want it to have a recall. To me, that was a bad thing. Although I've driven a Toyota Corolla over a decade, so consider your financing options, and this is very important because when you go to a car dealership, they will have companies that they sell their financing options, meaning they will offer you some options, and they will offer you as if those are your only options. And most companies will try to push for a specific financing company. So for instance, if you're going to buy GM, the company will try to sell you or get you financed through GM financing. Toyota the same, Nissan is the same. So they may not be the best interest rates. In fact, go to the credit union or go to your own bank. About 10 years ago when I bought the Volvo, Capital One was really, really aggressive on car loans, car financing. So I went to Capital One and I got an interest rate for them, which was very, very competitive, and I was very happy about it. And back then, they had this system that you apply for a car loan without a specific car, and they give you a check. And the check had a maximum amount on it, but by hand you could change that amount and lower it. Not increase it, but lower it. But at least when you walk into the car dealership, you now have an actual check that you could pay and get a loan from Capital One. And I knew my interest rate. So when I went to finance the car, They're talking about 10%, 11%, and I actually have something that says 5% on it. And I said, well, thank you very much. I'll pass on your financing. I'll just go through with this, and here's the check. Thank you very much. And then that made my monthly payments significantly lower. So just know that when you're buying a car, you don't have to go with the financing company that's being offered to you at the dealership. You can use any financing company and pay for the car. Compare whether you want to buy or you want to lease. There are mileage restrictions on a lease, but then if you're not driving too much, then they may be just the right fit. There's the cost of maintenance, cost of insurance. Most leasing will require upfront payments. And to me, best car is a paid-off car. So right now, my Volvo is about 8 years old, and I'm looking around. There is not a better car than mine. Why? Well, because I paid it off. I don't have a note on it, which means that's the best car that there is. The problem with a lease is that you just keep paying for it. It's like renting a car. You keep driving a nicer car, and your car is significantly new all the time and nice all the time. And my car is now an 8-year-old car. But there are pros and cons of both. So, maybe I'm being too conservative financially, and therefore I'm driving a rather old car. But then maybe, and depending on your financial situation, it may be that, you have the finances available and it is within your budget, and you just keep leasing it. And leasing doesn't necessarily mean that you lease a Mercedes 500. It may be, you lease a Toyota Corolla. So, and there are very nice deals I'm seeing on commercials. It looks like you could actually lease a Honda Civic for about $190 a month, and the Toyota Corolla right about that range. And maybe instead of paying, $18,000 and getting a financing and paying, $400 a month, maybe paying $200 on a leasing is more fit for your budget. And if you're not driving too much, the mileage and the upfront payments may be fitting into your budget a little bit better. So everybody has a different situation, and leasing does not necessarily mean that you are wasting away money, but it may be better fit for you. For me, my situation is that, I don't mind driving an older car, and I like my car, and I consider that as long as it's paid off, it's the best car. There are fees involved with leases, especially the upfront payments, and when you return it, if you driven the car for a little bit more over the allowed mileage, you start paying fees, and they can add up. So you may want to consider whatever you're signing into, just read the fine detail as to what you're going to end up paying. There are warranties, and whenever you buy a car, they're going to try to sell you extended warranty, service contracts. I mean, I always scrutinize these. Well, first of all, you can actually buy an extended warranty up until the last day of your current warranty. So there is no need for you to buy the extended warranty the day that you're purchasing the car. The service contracts, it's up to you, but obviously, you should ask, perhaps before you buy the car or before you get to the dealership, what is the cost or total service that you require first 3 or 4 years you own the car, and then consider how much of a service contract you're going to pay. And it could be that it's worth it. It could be that it's just a waste of money. But my feeling is that when you are at that dealership and you make that decision to buy the car, and then things are being offered to you, financing, warranties, extended warranties, service contracts, different kinds of options in the car, different kind of features in the car. Do you want to have this? Do you want to have that? Do you want that add-on? And then all of a sudden you thought you were going to pay, $20,000-$25,000, and all of a sudden you're looking at $30,000-$35,000. You thought you were going to pay $300 a month, and now you're looking at $500 a month. Feel free to say, I didn't sign up for this. Thank you very much. Let me go home and think about this. It just, don't let people push you into a payment that is more than you thought, and that is going to overextend your budget and put you at a financial difficulty. Obviously, everybody wants to take your money, but you shouldn't be giving them your money. Know what you're buying, compare, and be ready to negotiate. There's no shame in negotiation. You make them an offer. Obviously, it has to be a reasonable offer, but you make them an offer. We had a professor here, Ron Christner, who passed away. Rest his soul. He used to say that you shouldn't buy a car unless you give them the price. So I tried that when I bought the Volvo. It worked for me, but then they kind of accepted too quick. So maybe I could have actually bought it a little bit cheaper. So, I mean, but at least, I got a couple of $1,000s out of it. So, you should negotiate a price, whatever you can get. But don't be scared of walking away just because you bought. Oh, by the way, I bought my car from Baton Rouge, and just because I bought it from Baton Rouge doesn't mean that I can't come to New Orleans for service. It's just the dealership that I bought it at, and there's some perks, obviously, buying it from the dealership that's close to you. They give you loaner cars and service priorities and blah blah. But still, if the price is significantly better, it may be worth it. And I was willing to buy it from out of state. I was willing to buy it from a dealership where I like the car and the price is better, and it is what it is. So you can negotiate options and features. Sometimes some features are very, very easy to ask for. And it depends on, obviously, how willing you are to buy the car and how willing and able you are to walk away. So based on that, you could start asking for options within reasonable limits, but obviously you can negotiate this. Most importantly, you should be able to negotiate your interest rate. And the best way to negotiate this is to know your interest rate before you get there. And the best way to know this is just call installment loan companies and tell them that you are about to buy a car, and how much is it to borrow. But then you have to be careful, because every time you do this, you have to give them your social security number. That's a security risk. And they're going to do a credit score check, and every check that they made is an impact, a negative impact on your credit score. So you cannot just go ask 10 companies, because by the time you get to the car dealership, your credit score will be so bad that you may not be able to buy the car. So just be careful when you are pre-shopping, because every time a installment loan company checks your credit score will go down. And by the time you get to the car dealership and they do their check, they lower it a couple more points. It may not be enough for you to buy a car, and you may be denied. So there's a fine line between pre-shopping, and you should not over pre-shop. You should negotiate your trade-in. Don't let them talk your car down. Don't let them demean your car. It may be a Toyota Corolla with 100,000, 150,000 miles on it, but it was still running. It was still a nice car, and I had a very, very nice running AC. So negotiate your trade-in. I knew what the Blue Book value was. I knew what the value was if I were to try to sell it myself. I knew what the tax impact of a trade-in is. And when I went there, they gave me a price. I laughed at it. I said, thank you very much. I take this as an offense, and I take this as an insult, and I don't want to buy from a place who's insulting my car. And they took it back, and they doubled their offer. It was just, so if you're ready, then you know how they're treating you. But if you're not ready, then you really don't know if they're giving you a good price or a bad price. And my final advice is sleep on it, which means, after everything is done, you're ready to sign, everything is done. say, thank you very much. I'll see you tomorrow morning, and walk away. Sleep on it, come back the day after and say, where were we now? Let me sign that and buy the car. It's not going anywhere. I mean, again, it's just me. So if you feel like, no, this is not, well, it is what it is. So anyways, so this is the chapter about major purchases. Please do let me know if you have any questions and if I can be of any help. But this concludes our videos for this week. If you have any suggestions for or any questions for a video, let me know and I'll be more than happy to help. Thank you.